Hi there and welcome to our presentation today on Canada Goose. We're going to be going over a few topics today, looking a little bit at the background of the company, the internationalization issue that we've chosen to focus on. Then we're going to look at our resource-based and institution-based analyses, and then a quick look at an industry analysis using Porter's 5-diamond model. After that, we're going to look at some options that we've come up with, some short-term and long-term recommendations, and we will go from there. And with that, I'll pass it off to Riley.
Hi, my name is Riley Whitson, and I'll be covering the company background and the issue identification of Canada Goose. Almost 60 years ago, founded in a small warehouse in Toronto, Canada Goose has become one of the world's leading makers of luxury apparel. It all began when an entrepreneur named Sam Tick immigrated to Canada in the 1950s and founded Metro Sportswear in Toronto, which was a company that concentrated on the fabrication of snowmobile suits, woolen vests, and raincoats. In 1970, Sam Tick's son-in-law, David Reese, joined the company and invented the volume-based down filling machine. This invention led to the founding label Snow Goose, which later on grew into the top luxury manufacturer, as we all know, Canada Goose. Furthermore, in 2016, the company opened its first two flagship stores, one in Toronto and the other in New York City. Canada Goose has expanded so much and became so successful that it has become one of the top luxury apparel retailers. However, even though Canada Goose has come this far in terms of success, this company also came across one core internationalization issue, and that is their potential new international market entry to China. This issue is important because even though Canada Goose has newly accessed the Chinese market, the company is still in its early stages, and there are several factors for them to consider. In the article, Four Considerations Before Taking Your Business International, they mention that the influencing factors such as cultural differences between the two markets, legal and regulatory barriers, as well as foreign government consideration, could ultimately impact the company's international market entry to China, and it would also affect them in the short and long run. Thank you for listening, and I'll pass it on to the next person.
As our textbook tells us, a resource-based view is a leading perspective in global business that suggests that a firm's performance, at least in part, is determined by its internal resources and capabilities. Furthermore, the resource-based view provides that the resources and capabilities of a firm refer to the tangible assets that are easily quantified and the intangible assets that are hard to quantify. And these are used when implementing strategies. Some examples of tangible resources capabilities include financial, physical, technological, and organizational, while the intangible resources and capabilities include like human, innovation, and reputational factors. Concerning Canada Goose, we will discuss 3 of the company's most important resources and capabilities, as well as 2 additional resources that Canada Goose does not possess but would need to solve the core issue at hand of dealing with entry and continuing business in the Chinese market. The most important resources and capabilities to Canada Goose are its innovation, reputation, and luxury. To understand why these resources and capabilities are important to Canada Goose, we must first understand the VRIO framework, which determines the value, rarity, imitability, and organizational aspects of such benefits. When a firm is considering which resources and capabilities to focus on, it must first determine whether or not it's including value-adding resources that will lead to a competitive advantage. The second factor in the VRIO framework that the firm must determine is the question of how rare are the valuable resources / capabilities, and that some advantages common, and therefore firms need more than just a product to be rare to be successful. The third component in the VRIO framework is the question of imitability and how difficult an organization makes their resources and capabilities to imitate, focusing on the more intangible capabilities that are harder to imitate, such as tactic knowledge, superior motivation, and managerial talents. The fourth VRIO framework is the question of organization and how a firm can be organized enough to take full advantage and successfully leverage its resources and capabilities. With respect to the innovation, reputation, and luxury qualities, resources, capabilities of Canada Goose, they've actually come out with a sustainability report, and they do this every year, and it's just basically explaining their global action for impact, there's sustainable development goals, a lot of things like that. But for this section, we'll focus on their innovation, reputation, and luxury. So they actually have a plan for building resilient infrastructures to promote sustainable industrialization and foster innovation, which is from dedicated involved teams, engaging with an industry groups on sustainability issues and innovations. They're implementing environmental improvement projects within their own infrastructure. They're also ensuring a sustainable consumption and production patterns by reducing waste, generation through prevention, reduction, recycling, and reuse, which as a company trying to get a really good reputation, that's really important because you know that corporate social responsibility is huge within industries today, and people aren't going to like your company if you're not doing well. So another issue they take care of is supporting the polar bears. So they actually have an environmental program and they have students that go out, and it's really great for the community and for the company as well.
Porter's diamond model is a theory based on 4 aspects that the competitive advantage of certain industries in different nations depend on. These 4 aspects are 1. Country factor endowments, 2. Firm strategy, structure, and rivalry, 3. Domestic demand conditions, and 4. Related and supporting industries. Canada Goose has entered the market of Africa, Asia Pacific, Central and South America, Europe, Middle East, and North America. With that said, Canada is the host country. China is their most recent target international market, opening their first location in Beijing in 2018. In terms of country factor endowments, Canada is top ranked for the highest educated population, spending a higher portion of their GDP on education than any other country in the world. The higher population of skilled laborers and their access to research and new technology gives Canada an advantage. Additionally, both China and Canada have many natural resources such as oil, natural gas, fossil fuels, and mining, which provide both countries with trading power. Also in 1994, the United States, Mexico, and Canada formed the North American Free Trade Agreement, which has made transporting and importing goods to and from Canada much easier and has eliminated tariff barriers to our cultural, manufacturing, and services to remove investment restrictions and to protect intellectual property rights. For firm strategy, structure, and rivalry, Canada Goose has taken a hit to their revenue in the last quarter due to the pandemic, but they plan on refocusing their marketing investments towards brand storytelling and e-commerce to create stability. In addition, Canada Goose may find China's competitive market more intimidating than Canada's, but the company has been thriving since 1957. It will take a lot for them to get overpowered by new competitors. Domestic demand condition also puts Canada Goose at a competitive advantage in the down jacket industry. Given Canada's and China's cold climate in the winter, there's high demand for down and feather products. Also, due to the increasing urbanization across the world, a rise in consumer purchasing power and rise in consumer preference towards luxury and comfort are some of the factors that are more likely to influence the demand for down jackets in the industry. Canada Goose's products are authentically Canadian made and create a higher demand for their luxury status. For related and supporting industries, Canada Goose's direct competitor is Vince Holding Corp., which engages in the design, merchandise, and sale of various luxury brand products. It is a public company that was founded in 2002 and is based in New York City. Looking at the valuation of both Canada Goose and Vince Holding Corp., Canada Goose is valued at $4.4 billion, while Vince Holding Corp. Is only valued at $131.2 million. This indicates that Canada Goose is far more established and has no real immediate threat to their brand.
So based on our industry analysis and our resource views, we've come up with a few options for the brand to continue forward with their international expansion. One format that we've thought of is expanding their brand. So that would entail them creating a new line of products that they could use in times other than the winter season, possibly for entry to more tropical markets and to be better suited for different climates. Another way we've identified is for a diversified management. So this would allow them to acquire something like a local firm and acquire local knowledge about the area that they're in and some of the trends and other items that are there. They could also look at possibly entering the market by opening a subsidiary in that area, again, allowing them to expand their brand and focus more towards the market that they're entering. The other option that we've considered is an e-commerce expansion. This would allow the company to not only enter additional markets internationally through the availability of the internet, but also it would allow them to run better promotions and possibly begin drop shipping, as the new term entails, with different companies like Alibaba and Banggood. And with that, I'll pass it off for the short-term recommendation.
Yeah, so to talk a bit about our recommendations, we believe that Canada Goose has a market-seeking strategic goal, but we believe for the short term that they should have an efficiency-seeking goal. This could be by increasing their economies of scale. We believe that in the short term, Canada Goose should focus more on broadening their company on the e-commerce market, especially in China. As they first entered China in a non-equity mode of entry through exports, they had a direct-to-consumer business model, but have now worked on putting more physical locations on mainland China. Focusing on the e-commerce market will expand their production along with the physical stores, hopefully creating economies of scale and lowering costs in the future. Moving on to the next slide. So to enforce this short-term recommendation, we believe a deal with a company such as Alibaba would be beneficial for Canada Goose. Because Alibaba is big in e-commerce, retail, and technology, and we believe that they would be a huge marketing asset. The disadvantage that we could think of this is this might be a bigger shift than the company is ready to take on, while having physical stores moved outside of Canada, but also trying to gain a competitive advantage on the e-commerce market. We would try to overcome this advantage by implementing a strong risk management strategy with the consideration that Canada Goose will most likely want to keep manufacturing their products in Canada. We would lessen the risks by knowing the niche market and further developing the product to understand the cultures, values, norms, and standards of the new market. This could lessen the culture gap between Canada Goose and China. To move on to the next slide. So a long-term recommendation we could think of was to move back to market-seeking strategic goals and to start co-marketing with Chinese companies. This could help Canada Goose ensure their stay as a foreign company and be beneficial to the brand and expanding awareness. This could potentially help the company expand to different product lines as they continue to expand globally. Something like a summer product line would be beneficial, as we think pushing boundaries and having a wider range of products will set them to have a better competitive advantage over their direct competition. So this concludes our presentation. So thanks so much for listening, and we can't wait to hear for your guys' comments and questions. Thank you.